Morning all. How are we doing? All right. I'm not with it this morning. Always late on a Thursday. How is everybody? Morning, Stevie. Let me just get my tablet up. What's going on my monitor? Stop playing Candy Crush. Yes, I still play Candy Crush. Right. Excuse me. Hey, morning to you, Armand. How are we all doing? It's Thursday. Right, where shall I start? Right, so just a quick update on the new EA for the range breaks. I did a load of testing yesterday. I got through the DAX. I've got the Dow and the Nasdaq to go. That took me all day yesterday. And I've also annoyingly identified 3 new testing areas I want to test. So I've got a development list basically because I think there's a lot more opportunities to make money in different ways with the EA. So for diversification basically. So I quickly tested some of these yesterday, like changing the opening range breakout timings to different times, so trying an hour and a half, trying 30-minute opening range breaks. They all produce profit as well. So literally most of them all produce profit as well. So there's just an unlimited. I'm calling this the opening range breakout EA, but this is a breakout EA and it works on all breakouts. So you could use hourly breakouts, you could use daily breakouts. You can't use daily breakouts actually because it works on the minute chart. So you can't use daily breakouts, but you can use any intraday time period you like. So you could say, I want to break out of the entire Asian range or London range. So you could take a New York session breakout, for example. So much it can do. And I tested a few variations and it opened up an absolute can of worms. So I think what I'm going to do, I'm going to finish, this is my findings, if you like. So I did the DAX. Obviously on the spreadsheet, I've got multiple tabs, as you know. So something else is interesting as well. Bank holiday in Spain and Italy. Yeah, Stevie, it's might be a bit of a, well, it's German stock market and obviously the world invests in it. So we'll see what happens to the open. It might be a bit of a quiet one, I don't know. But as you know, I've got all these tabs basically here with all different tests run in them. So I've done testing on all of these and I'm now here. So I've got all of those to go. And basically what I've been doing is just writing down my observations on so I've been testing multiple set files, finding good set files and commenting on basically what they do. This one, for example, stops out a lot, keeping the drawdown very, very small. And it makes home run trades. So an illustration of how this one works. So this one is a good investment EA because you're going to get huge returns on it, huge returns. But you're not going to get them very often. So this is a typical trend strategy. It's got a strike rate of somewhere between 20 to 30%. Trend strategies have a 20-30% strike rate. Mean reversion has a 50 to 60% strike rate typically, but it only will grab 0.5%, a percent sort of thing. So it's not unusual to have a 20% strike rate or 30% strike rate on a trend-based strategy. Got another one here. This one will pass prop very quickly. It's got very, very low drawdown, but it's got a low return. But you can see the equity curve on this. You just need to get the timing right. So if you get in here, you'll pass instantly. If you get in here, you will not pass, but you won't blow it very quick. So this one is a good set file to run to actually pass an evaluation. It doesn't matter. If you got in there, for example, that'd be a pass. That'd be a pass. That'd be a pass. So, and I found other set files that are, just testing the equity curves to see what each does, what the pros and cons of each are. And this, like I say, there's 45,000 roughly permutations I've tested. So it's like finding a needle in a haystack. Which do you choose? So I'm just trying to find a variation. So this set 6,500 out of 8,000 on that one uses loose stop loss. it goes big wins. And it also lets the trade breathe. So it gives you some nice equity curve at times, but it will go through periods of stagnation because it's got a wide stop. So it's just the observations. So this is what I've got to do, is get all this together. Some of these are real. All right, so this is an important part. I'm going to drop percentage risk. So in the EA, you can use percentage risk, percentage of account risk. I'm dropping it because it doesn't work. I don't care what anybody says, compounding is bollocks. Doesn't work. Because if you get 10 losing trades in a row, if you say start off with 100K and you're risking 1%, you're risking 1K a trade, right? If you have 10 losing trades in a row, you are down to 90K. So now you're only risking 900 a trade. So your ability to gain your account back after that losing run is diminished dramatically. Yeah, a 2-to-1 risk reward trade on that is not going to get you anywhere near back to your there. Equally, if you have a run up of 10 trades on the trot and you trade your account up to 140K, for example, you're now risking 1.4K per trade. If you have a losing run at 1.4K per trade, your account will get degraded so fast and your profits are completely wiped out. So percentage risk is just not the way to go. You need a fixed dollar risk or a fixed lot risk, basically. So I'm going with fixed dollar risk, and I don't care if people don't like it. I've tested this to death. That's not the way to go. Yes, I can put it together as a compounding one, and I can show you a profit of 800K, no problem. But as long as you're happy to take 270K of drawdown in year 3, no problem. But who's going to give their mortgage back just because their account's grown? Nobody. It's just ridiculous. And it will blow your prop account instantly. So what's the point? So yeah, so loads of testing, loads, and you can see what I did yesterday. So I'm on to the Dow, second stage Dow testing. So that's where I got to yesterday. And I've got loads on today. My dog's got a bad leg. I've got to take her to the vet this morning. I've got parents' evening this afternoon. So, but on the plus side, I've decided I'm just going to stick the EA out there. I'm going to do some recoding on it today, stroke tomorrow. I'm just going to get it out, and then I'm going to do all the documentation and stuff later. So if you want to go and muck about with this, you can do. But it'll be limited documentation to start with because I haven't even finished testing on it yet. But anyway, so I will I'll sort that out over the next couple of days. So starting with the news today, we have got ECB. We've got Lagarde speaking at midday today. We've got unemployment claims this afternoon for the US, and we've got Mackler speaking for the Swiss later. This is down as an orange news, Mackler. But you have to bear in mind what's coming next week. Okay, so Mackler doesn't speak. I always call him Mackler because I make the A and the E and A, but I don't know if it's Meekler. I don't know how to pronounce the name, but what we got coming next week, obviously, is the SNB monetary policy press conference and their overnight rate. So we may well, although this is an orange news event, we may well get some indication of what they're going to do because they're always tight-lipped about what they're going to do. So there'll be keen ears listening today, I think. Morning, Jane. So just be careful of that this afternoon. If you see the Swissy going nuts at the New York Open, you know why. Something's been dropped as a hint as to what's going to happen next week with the interest rates. So, but apart from that, there's no other news today. So it's just kind of business as usual. And then tomorrow we got PPI. Overnight news, not an awful lot. The Dutch CPI figures came out. Not that that affects us in any way. We've got Hong Kong opening up a little bit, which is good. But obviously China's doing the same thing. Australian trade balance. We had the Japanese quarter-on-quarter GDP figures was a miss as well. So Japan missed GDP, which isn't good for them. I don't know what's happened with the yen this morning. I haven't looked at any charts at all this morning. Opening range is going in on the DAX. Monitor that. So it doesn't look like there's nothing much happening with the yen. There was something else as well about the Russian oil. Yeah, that was it. The EU. So this came out yesterday, just before market close. EU intends to take additional sanctions against Russia's energy and mining sectors. So there's a real battle forming between the EU and the European countries and Russia over energy. They're saying we're not going to pay 60. Russia's going, fine, no problem. You're not having ours then. And now they're going to put more sanctions on it. So they're basically cutting their own throats from what I can see here, because I don't know, unless you've got another source of getting everything you need it, and you've got to pay for it. Euro. So I'm not quite sure what that's going to do to the price of oil moving forward. We had oil come down, obviously, yesterday. Interesting. It's got nowhere to go as well, oil. But I posted this in the Telegram yesterday. I said, anybody who's longing oil, be careful. Because a lot of people were mentioning yesterday in Telegram about potentially longing oil. There's a good signal on the hourly. But we're here. We've broken all resistance levels. That it's just gone through every resistance level so far. We're looking at these sorts of levels now, which is a good couple of hundred ADR away. Plus. And you know what Euro's talking about? $60 a barrel. So 63 to 66 is where the next resistance is, support is. So just be careful if you're long in this, because there's nothing but fresh air here till you get down to here or potentially here. Yeah. So just be a little careful with it. I would. You know how fast it moves. We can see how fast it moves. So if it's unhappy, so just be a little careful with oil. Got 50 seconds till opening ranges in. I have a bot that simply only buys or sells and holds till it hits a 2-pip profit with a max drawdown setting of 10%. Good luck with that. You won't get anywhere with that because you'll get slipped. Slippage will kill it. The scalping EA, first of all, they're not allowed on props for a start. You won't be able to pass a prop with that. And secondly, it'll get slipped too much. Might work in theory, but forward test that on a live account. Don't forward test it on a demo account, because you get totally different slippage on a demo to a live. So forward test that on a live account, probably with a cent account or something. Check it works. Scalping EAs work in futures. They don't work in Forex because of the spread. Typically, your back tests will be totally inaccurate. Watch this when I get triggered into this trade here. You see where they are exactly on that red and that green line there, yeah? Watch when I get filled. Watch where my actual order gets placed. You'll get slipped. Got to do it on live. Test it on live. You'll get totally different results, which is why you have to test for slippage. Every test you do, part of back testing, part of robustness testing is slippage. If it doesn't survive slippage tests, it's not going to work. 2-pip slippage per trade will turn a positive result into a negative. So just be careful. Test it though, it might work. There you go, look at my slippage. I didn't get slipped much there, did I? But I did. Look at that red line and look at where I actually got filled. That was quite a nice small slippage this morning. Always happy to be able to join your streams. Oh, that's nice. Your lice streams. I don't do lice streams. Lice. I remember when the kids had lice. Live streams, yeah. Sent a message on Telegram inquiring about the new ORB. Will one day be available for purchase? Yeah. Coding's all done. I have got to tweak the coding. I'm going to take out percentage risk. Well, I can leave it in there. It just doesn't work. People are just going to moan. I don't know. I don't know what I'm going to do. I can't please everybody, and then if I include too much, everybody moans it's too slow. You can't win. But I have tested percentage risk to death, and it's not a good thing to use, honestly. You can always increase the amount you want to risk per trade, but I get some very, very, very out of this world results with percentage risk. The other thing about percentage risk is you get outlier trades in your P&L. This is a prime example here. I've actually documented one of the outliers. Yeah. So because I'm using a percentage risk on this particular example, you get a 70 lot trade. And the reason there's a 70 lot entry, the typical lot entry on this was 8 pips. Sorry, I think it's 9 to 20. Yeah, 8 to 20 lots was a typical trade on this, right? If you get a tight opening range and it's doing a 1% risk, this thing jumps in at 70 lots, right? If you get dumped fast and hard and you get slipped on this, which on a tight range like this is not out of the question at all, this could cost you sort of like 6 grand, 10 grand, I don't know. It's dangerous. But equally, you're going to get a trade like that, which in this case made £22,000, right? The EA only made 49,000. So this one trade was responsible for 50% of it. It's just not conducive to real world. There's no reason why you can't use a fixed risk of $500 or $1,000 or something. And also you can control that based on your account size. There's no reason why you can't use that. And if it's going well and you've grown your account by 15 grand, knock it up to $600. But if it has a losing run, you will lose a lot more than you will ever gain, and it will just knock your profit right back. So, but yeah, I'm kind of ready with it. I just need to tidy some bits up. And then I will develop this because I've got lots of things I've already tested which work really well, which I want to implement myself. So, to be fair, I see slippage in demo, but I don't know how accurate. Yeah, try. I mean, with slippage, demo trading conditions are often favourable to the trader. Brokers know people trade on demo and they go, "Wow, I'm amazing on demo." And then you stick it live, and you don't realise order execution. 8cap, for example, as a broker, order execution. You press the buy button on an 8cap demo, it goes, and you're in. You press a buy button on a live 8cap account, you press the button, it goes, then it places your trade. And you're like, what? Why did it take 2 seconds to place my trade? Because it's a live account. They're actually going out and finding dark pool funds to come back and place your trades. It's, slippage takes 2 seconds to get the order on. If I'm pressing the order button here, by the time I've actually got my order filled, it's here. Which is fine if I'm buying, but if I'm selling, it's not good, is it? You won't experience that until you use a live account. And even cent accounts actually, I mean, they are trading live, but the amount they're trading, they don't really care. They'll execute your order straight away because it's going to make zero difference on money. Try and trade on a proper account if you can. So got an ORB to the upside, which is obviously stopped out. And again, during my testing, this situation, the failed breakout on candle 1 is something that is quite prominent and happens a lot. And then we fly off in the opposite direction. So again, this is something I haven't tested and I want to test, but I want to test just, not taking that one and only taking second and third. So I haven't tested any of this yet. What's the difference between just taking one opening range breakout and not more than one? There's so much more to test that I haven't done yet. There you go. So stopped out on that. So now if this flies up and stops me out on that one, it's a double-ended stop out. So the argument there is take the 15-minute opening range, not the 5 and the 10. What's the difference? All needs to be tested. Take a 15, a 30, and a 45. Make sure they all trigger within an hour and a half. I've tested that and it works really well. But I don't know how much better than the others because it gives me 7,500 profitable results. I don't know which one to look at. So hopefully if you guys get hold of it, you can all come back with someone's going to find an amazing set file. We can run with that. Anyway. Right, so let's have a look at where we are. Done news. There's no ADRs. We've got oil now even more extended. So as I was saying, worrying about oil. Be careful with oil. We are now even more extended on the weekly ranges. So we've done. 1100. Cost. It's not even wide enough. Look, 1034 is 125 ADR. We've done 1100 so far this week. So oil's really tanked. Obviously, the advantage of being there is higher probability pullback. But you know, I just don't know what's going on with Russia at the minute. It's very news driven. You know, Russia came out yesterday. That was another thing about yesterday. Russia, Putin and his nuclear missiles. A load of news came out about Putin saying that he was going to use nukes here. This is how confusing everything is. The threat of nuclear war is increasing. Russia views nuclear weapons as a response to an attack. Russia will use all available means to defend its allies. Unlike the United States, Russia does not have tactical nuclear weapons in other countries. Then, Putin, we did not discuss the use of nuclear weapons. Russia regards such weapons as a deterrent. So these two comments, I was trading NASDAQ at the time. I had a lovely drop on NASDAQ, took profit on it, and it went straight back up there. Because all this lot is completely contradicted by that. And this is what we get with oil as well at the moment. Just like non-news and news. Sorry, bear with me one sec. Sorry, I was just getting an update on the vets. We're meant to be going to the vets at 9:45, and the vets called in sick, so we've got to go to another vets at 11 o'clock. That's really going to screw my day up because that's going to take an hour and a half out the middle of my day. So news, oil is driven massively by news, as we know. So we'll see what happens with that, but it's going to be a tricky one. That's what I was trying to say yesterday. If there are ways to reduce the number of losing trades, yeah, there will be, Diamond. The way to reduce the thing, it's a double-edged sword. So this setting, for example, will reduce the number of losing trades. So when you get, if you were to, for example, get all three of these trigger, and then it tanks and stops out on all three, you can remove two of them, and then obviously you'll have less loss. But when it triggers on all three, pulls back and goes and flies for 2 days in a row, you're going to lose 2/3 of your profit as well. So yeah, yes, it will reduce losses, but yes, it also will reduce massively your wins as well. So again, it needs testing. It needs testing. There's so much testing that could be done, but you know what I'm doing at the moment is the typical strategy, the standard strategy, which is adding positions as breakouts unfold. That's what I'm testing, and that's what is working now. So removing the others and retesting the others is yeah, brilliant. We can do all of that, but it all takes time. You know, average test for me is around about 1 to 2 days for one set of tests on one condition over 4 years at tip level. So you know you could be testing this for 6 months and still not get anywhere near testing the entire every connotation of every strategy and every permutation of breakouts. It's vast, isn't it? In secondary breakouts, you know, testing secondary breakouts as well is going to be a big thing. I'm witnessing it because we triggered on the sell. See, this is going to be a double-ended stop outlet. We're going to get stopped out both ends here because we are in rotation. What happens here? I see this a lot because I watch visual testing of the EA, which is brilliant to do. I have no idea what this set is on, but I don't know what this is set for at all. But we'll run it. So watching when you're watching it run. So we get to a breakout, yeah. So I'm watching what's happening. We've got the opening range 1, the opening range 2. We've broken out to the upside. We're long. We're going long with the second position at the highs there, right? We've stopped out on those 3, right? Now watch. what happens after, okay? So after we came back down again, we broke back out. There was an opportunity to make money there. So this is something that can be added into the EA. If we're flat at that point, remonitor, wait for the secondary breakout, take the secondary breakout. This happens a lot. Neo, you're early. Oh, wow, he is early today. Can you give me your take on Aussie CAD? I'm short and I've been short for 3 weeks now. Yeah. I will look at that in 1 sec. But yeah, so, you know, all these breaks. So there's a quick stop out there. This is obviously set on a very tight, low risk setting. Right, so there we've got a break. Look. Break, stop, re-break. Take that. We need to take that, don't we? But you would capture that if you used 15-minute and 30-minute, you would catch that. So all you do is you change it from a 5, 10, 15 to a 15, 30, 45, which is what I've tested, and it catches these beautifully with one position, then adds to them. So it makes small losses and then it grabs the prevailing trend that comes afterwards. So it doesn't always go out the gate. Sometimes it goes delayed. You know, there will be many, look at that, missed it. Because of this is obviously a very, very tight set file, too tight. But this will produce virtually no drawdown and it will get some lovely returns. So, you know, he's made what? This is probably on high risk as well, actually. This is on too much risk. It's got $1,000 risk. It's too much. But yeah, we're running fairly tight breaks and trailers on this one. But you know, there's all sorts of stuff that can be tested with it. So it's something to play with and develop over time. But the strategy works. Aussie dollar CAD. So I'm in New Zealand dollar CAD. Aussie dollar CAD is very, very similar. So we had the interest rates yesterday for the CAD, which came out as expected, which typically you will find will be positive for the currency because the market will have factored in the interest rates to that level. The problem with the CAD is the previous interest rates they missed. So the market has been factoring in since that happens, the market has been like, well, we're not happy with you. CAD's been dropping, as we know, and we are expecting you to do what you said. So what the market will likely do now is go, right, okay, what's coming next, Bank of Canada? We need to know what your next forecast is. So I don't know if we've had the forecast yet, but when the interest rates have come out, we will have a better, clearer understanding of where they're going and how the interest rates are affecting it. They're one of the highest out there at the moment. So typically when we get this miss, we have a sell cycle. Then we go into an accumulation before a buy cycle. So what the whole thing is with interest rates is they are designed to obviously control inflation and keep the economy ticking over at a level which is sustainable. So if you have an interest rate miss and that has a negative impact on the inflation, they have to do something about it. So they've done what was expected. So in theory, they are doing what the market wants. And that should be bullish for CAD. We got an immediate push down on the CAD yesterday on the interest rate announcement. So we did get positive movement, which is good, which was here, that candle. There. So we got a positive move. New Zealand dollar CAD actually looked a bit better than that yesterday. So it was that candle there. So New Zealand dollar CAD was this one here. That was the interest rates. So we had an immediate push down. That one hasn't gone out the top yet. Aussie dollar CAD has pushed out the top, I assume because Aussie dollar is... Aussie's not strong this morning, is it? It's mixed, isn't it? Aussie this morning. But yeah, it's pushed out the top. We've done a liquidity run on the highs. So it's a case of wait and see today. But we're in an accumulation. We're in a, what is day 6? So 1, 2, 3, 4, 5, 6. We're in day 6 accumulation. Could count that. Yeah, I mean that's where the breakup started, but that's the real accumulation, isn't it? Here, so think wick off. Yeah, this is your wick off spring happening today. What we should be looking for today, if there's a possibility of the buy cycle turning into a sell cycle, is a pullback down to range lows, which could be those ones there or those ones there, and then an accumulation before a continuation break. So looking at it as a wick off, it's a push, push, accumulation, stop hunt, drop, accumulation, ready for the break. But it's certainly positive. So it wasn't negative. Now, at the moment, that is obviously the same as the Aussie. So the Aussie had a positive. This is a very odd currency because what we've had is exactly the same situation with both, haven't we? We had a miss, which massively weakened the currency on the Aussie. They then corrected it. CAD, we had exactly the same situation happening. We had a miss, which they have now corrected. So they've both done the same thing. So technically, they are both they're both weakness coming back into potential strength. Which one's going to be the stronger? That's the question. So the thing that's going to affect that is going to be CPI figures. If we get negative CPI figures Aussie, positive CPI figures CAD, this thing's going to come down. The next cycle will be like that. If we get positive, you know, it's range, isn't it? We're going to get something like that. It's going to hold. So it's very, very difficult to tell which way this one's going to go. We haven't really got any clues at the moment. Next week, we've got, what CPIs have we got next week? So we've got GDP for New Zealand next week. We've got unemployment. Sorry, it's not New Zealand. We're looking at it. Odd. We've got unemployment for odd. So that's a biggie. So if they get a positive there, obviously Oz is going to go up. Haven't got any CAD, have we? Retail. There we go. There's the CPIs. So it's the week before Christmas is when we get the CPIs for the CAD. That's going to be the next really big mover. We've also got the odd monetary policy, so that's their fiscal statement. So that will be where they will be giving us more inclination as to which way they're going to go with their interest rates in the future. We've got to wait a couple of weeks, unfortunately. Unemployment, though, that's a biggie. So the unemployment figures for the Aussie, if they come out negative, will be coming down. If they come out positive, will be going up. The market is very fickle at the moment. There's a lot less manipulation going on because of the fundamentals that are driving everything at the moment. It's fundamentals in charge. It's interest rates, it's unemployment, it's inflation. That's literally it. When you've got countries which have got, you know, in our normal life, we have fairly low inflation, we have fairly low interest rates, everything's ticking along, people have got money, jobs are good, you know, businesses are doing well. At that point, you get lots of manipulation in the market, which is where we see a lot more market structure, buy cycles and sell cycles. When you've got times of crisis like this, we get squeezes because there's nothing more important than inflation. It's very easy to tell where they want to position themselves. And it's when you get caught the wrong side of that, that's when you get the squeeze, because you don't know it's coming. You get in, and just after you get in, it goes like that. And that's why, you know, that's what's happened to me with Aussie New Zealand. You know, all ready for the next bounce, and then they screw it. They both screw it up together. Well, Aussie screwed it up, New Zealand didn't screw it up, and they both did exactly the same thing at the same time, and you just get that perfect storm. And there's nothing to stop this until they start to correct themselves, which the Aussies, hopefully, are starting to do. So yeah, they're very difficult, those two, because they've both cocked up at the same time and they've both corrected themselves at the same time. So it's a difficult forecast. But market's very flat this morning by the looks of things on FX. Second position short on DAX. The other thing you need to bear in mind with this EA as well, there's an awful lot of instances I've witnessed when I've been visual. And then that's basically just to clarify what I did yesterday. When I was doing this, this document yesterday, all these notes. This is me sitting through 2 years of visual backtesting on every set file. So I haven't just run the set file. I watched the set file so that I could see and observe the pros and cons of every type of setting. What I observed yesterday was an awful lot of times where I would have taken profit, and the EA obviously just did what it was told. So it was using a wide trailing stop. We're up here and the stop was down there, and I could see a really obvious resistance level where we'd double topped. We hit it and I would have gone, and as soon as we got a bearish engulfing, I would have taken that 7.9%. What it took was 4.2% because of the trailer. Yeah. So there's a lot of instances you'll be, after this EA is triggered, this thing may well be sitting in profit and you'll just be going, shut up, I'm taking that. That's 2 months mortgage. Which obviously you don't factor into backtesting until you actually see the thing running and you're like, well, why did it not take profit there? Well, because it's not told to. Yeah. So there's a lot of that you'll see running. So with this, the reason I mentioned that is because we've got an obvious resistance support down here. I'm just going to stop out anyway. Look, horrible wiki day today, nasty. So yeah, you'll get a drop, and it will get down to there, and your trailing stop will be there or something, and you'll be like, well, this is obvious. We're going to trigger there. So you close it out manually, and you'll bank a lot more money, I think. Don't forget the EA is there to just automate and execute the strategy for you. You can obviously intervene with this thing, and I think I will. Like I did when I passed the evaluation, I intervened because I'd done $4,000. I was like, I'm stopping. I need to because it's a pass. I'm not going to let you give back $2,000 of that just because I want to see the EA running. I'm taking the cash, mate. So don't forget, the results that you achieve could also be better with manual intervention. Yeah, double stop out on that one this morning, unfortunately. Still got a buy stop at the highs, so we can still trigger on another one, but that's wiki as you like today, isn't it? Broke out the top, broke out the bottom, pushed up, pushed down, pushed up. It's just basically accumulation today. So we'll see if we get a break to the upside now, and then we'll add to that, fly off to the top, and get that money back. So that's ADRs, there's nothing there. Weeklies, we've also got US dollar CAD. So again, positive CAD news, but no real conviction from the CAD. We've got fairly good US dollar. We've obviously seen the indices coming down multiple days in a row now, so we know there's US dollar strength out there. I still like this long. It's extended. I would love to see it pull back into here. That would be a nice long opportunity if we can get back into there. So the market structure is obvious, very, very, very clear market structure. This is what I'm looking for: a higher low to be put in somewhere in here on the 2472 area, or just anywhere in this propulsion gap would be a lovely entry long. If you can get an entry long on this ahead of next week's mountain of US dollar news, you could make some serious money. I get the feeling next week we're going to get some really good numbers coming out of the US. PPIs will give us a clue tomorrow if we get some positive PPIs. Other news, looking back at the previous week, we're getting good numbers coming out of the US. Yeah, we got Empire State Manufacturing. PPI was a little bit down there, but retail's up. We had the unemployment claims all came out positive. Home sales are holding, which is great. It's all looking pretty rosy at the moment for the US. Rosier than I think they were anticipating at the Fed. So yes, good opportunity on the US dollar CAD potentially. Pound US dollar. So pound US, it's a sell. It's a definite sell long term. Figures will obviously tell us next week, but we've got next week. We've got where are we? We've got the GDP on Monday for the pound. Then we've got claimant counts. We've got Bailey talking, and then we've got obviously CPI for the US. We've got CPI for the pound. We've got the rates for the US, and then we've got the rates for the pound, and then we've got obviously retail. We've got manufacturing PMIs, the services PMIs, and we've got services PMIs and manufacturing PMIs for the US. So right now, it's a sell. Next week, I can't tell you. Yeah, no one out there at the moment can give you a long-term forecast on pound US dollar, because next week the entire world is changing because it's new rates. Yeah, something that is at the moment, I'd say it's a strong sell. What it'll be next Friday, I don't know. Need to wait and see. So difficult. I would say it's a short still. I mean, it's what I'm assuming next week is either as expected or positives on US. Pound, I'm expecting misses and as expected. So I suspect we will see downward momentum. But it's all based off of this. So, you can't speculate on anything until you know what's going on with rates. Then we will know what to do for the next 3 months, or next month at least, until the next rate announcement and the next CPI figures come out. But we need some figures. But where we are at the moment with pound US, obviously we've had a weak US dollar, which has obviously allowed the pound to make headway. It's up at a nice technical level at the moment, where it's starting to reject. We've had the reverse alert, so market structure has shifted to the downside. But we are also in a bull trend. So, it's all conflicting. We've got a bull trend, we've got a reversal alert, we've got upside resistance. So resistance this is all bearish, this is bullish. Fundamentals at the moment are like that. But next week, I expect them to be like that, which means this is coming down. So difficult, very difficult. But, long term, there's absolutely no reason. Nothing has changed fundamentally in either country to say that this shouldn't continue to go down. And I see us over the next 12 months achieving parity. I don't think we've got enough in the tank to hold up as a currency. We've got too much going wrong at the minute economically. It doesn't matter what figures you get. It's a double-edged sword with inflation and interest rates. Interest rate and inflation rate increases are positive for a currency, but they have a negative effect on the economy. We've got the worst in the country. We're worst in the world at the minute. And they're just going to continue to make it worse. There's very little we can do in the UK at the moment to dig ourselves out of this very quickly. And the US seem to be landing their plane without landing gear on water. We seem to be landing it on a tarmac runway. So a lot more can go wrong for us. But we will see. Aussie dollar New Zealand dollar has just started to take off in the last hour. New Zealand CAD, what are you up to? Holding. Okay, so triggered long on DAX. This is a nasty piece of work this morning, isn't it? It's just going to do that now, isn't it? See, this is the point, right? When you've had this happen, where, as I just showed you when I did that little back test, it will now take off in one direction or the other quite a lot of the time. Whether it will get a trend or not, we don't know. But this is where I'm thinking, right, I need to reset. So it's almost as if, me personally, obviously, because I spend my life in front of charts, I would be now putting the EA on with a different set file, and that set file will be triggering at 45 minutes, 1.5 hours, looking for the next break. Because I think, we are going to get a break. It's the whole thing, isn't it? You don't know. Some days you're going to get that, and it's going to be monster. Some days you're going to get this, and then you're going to get that, and that's the ones we need to work on. Which is again a complete 3 weeks of backtesting I've just done. It's the whole lot again, with different time periods. That's what's got to be done. Might become my life's work, this ORB strategy. And do you know what the annoying thing about the ORB strategy is? I learned it a decade ago. I never used it. But anyway, it's one of those things, if I'd have known 10 years ago, what I know now. Right, so let's have a look at the RSIs. There's nothing on RSI extended apart from EuroCAD at the moment. So a lot of the pushes we've had have all calmed down or reversed. So we've got a lot of RSIs which are coming out of extensions now. EuroCAD still going strong at the moment. We've got a good strong euro at the minute. And I think that's going to continue into next week. But it's whether or not we get strength on the other currencies, obviously. But EuroCAD is still very, very extended, obviously, off of this CAD weakness, and we haven't seen the follow through yet on the CAD. So we've had the initial reaction on a lot of pairs, but all we're doing now is sitting inside bar on a lot of these. So today we need to see what the CAD's going to do with the information that we got yesterday off of those interest rates. If we get some decent move off of the interest rates, to the upside, I think people will jump on board the CAD because everybody is expecting the CAD to strengthen off of the back of the interest rates. We need to see the market react to it. So we need to see the market actually start a move. And once the move's started, I think we'll get a lot more participants jumping on board. And obviously, then it will become a self-fulfilling prophecy and start to move. But we're just not seeing it at the minute. So, if you look at what we got, we are just at the minute accumulating inside the interest rate announcement. So we need a break either side to tell us which way we're going to go, which we haven't got at the moment. And obviously, as soon as we get that reversal alert, if you're looking, you can watch obviously the hourlies as well. That would be a confirmation. And then, you've got, what you're working with then, don't you? You're safe in here for shorting, assuming that we are going to have continued strength on the CAD moving forward. At the moment, we looks like this morning they want to go, doesn't it? What's the CAD doing? Yeah, so we're rejecting the highs at the minute, so it's looking all right. You need to employ the Chat GPT AI. What? What's that? Never heard of it. Chat GPT AI? What's that for? That's a new one. Has anybody got any pairs they want to look at specifically? Because I haven't actually got any RSI extensions to talk about. There's no ADRs today. I'm going to go through all the indices. I've been through oil. But from an FX perspective, if you look at, obviously, yesterday, we didn't do anything yesterday. So a lot of the daily candles yesterday were pause candles and inside bars. So yesterday's price action was terrible across the board. Look, pause candle. Yeah, we just another spinning top. Yeah, inside bar. So we didn't do anything yesterday. Euro odd had a big rejection. Obviously, that was the rates yesterday, but anything to do with odd obviously had a movement. Everything was a little bit near yesterday. So Aussie New Zealand yesterday, one of the best candles I could possibly hope for. Compared to what this thing has been doing, we had a pause candle. We had a liquidity run and a pause candle. The buyers won yesterday. fantastic. Exactly what we wanted. So far today, we've pushed down and rejected. Perfect. Get some legs. Get a break of yesterday's high. Let's get this move started. So yeah, it was all very inside barry yesterday. So there's not a lot to look at. Euro New Zealand. Euro New Zealand obviously has pulled back. We're a bit range bound on this, as you can see. We're in a very wide range at the moment. We've got obvious support resistance levels down here as well. So any kind of price action you see around these levels, reversal alerts, would be good to take. At the moment, there's no directional bias on this one. Euro is strengthening up on fundamentals. New Zealand, we know, is strong on fundamentals at the moment. So where we are at the moment is right in the middle of a range. So you have a 50-50 shot of it going up or down from here. There is no massive fundamental bias to play, and you're in the middle of a range. There's no range extensions to play. We're not extended on RSIs. So as you can see, you take the RSI extensions and you just trade them. Long there, short there, long there, short there. Just about along there. Yeah, so potentially it's a long at the moment. We've had the reversal alert on the 4 hour and retested here. So potentially that's a good reaction. But again, anything you take at the moment, you've got to factor in what's coming next week. Armageddon, basically. Every CPI, every interest rate that is important to the Forex industry is all happening next week, every single day. There's not one day next week where this thing is not going to explode in one direction or the other on one currency or the other. So whatever you're going to get into, if you're trading anything more than intraday, you are going to be affected next week. This week I see being, and we've seen it, haven't we, with the daily candles. Yeah, the reason we're getting these daily candles at the moment is because we've got Armageddon coming next week. So no one wants to put a strong move in any direction because everything's going to get affected by what's going to happen next week. So intraday, you know, any intraday trading you do, you take your pick. Best thing to do with any intraday trading is just to look at support and resistance levels and extremes. So, you know, RSI extensions. Yeah, so go long, go short. Look at range highs and lows. Go short, go long, because the chances are today and tomorrow we are going to accumulate because it's all happening next week. There's nobody wanting to get out of a range. No one wants to take a range breakout and put a ton of money long on this when we've got interest rate announcements coming next week for the euro. You'd be crazy to dump 20 million into a long position for the next 3 months, not knowing what the hell the euro is going to do with the interest rates. It's just not going to happen. So it's going to be a bit of a dull end to the week, I think. The only news we've got to look forward to is the PPIs tomorrow, which will probably move it. But, you know, that's what we'll probably get. Yeah, so we'll be trading away and then we'll get a whipsaw and we'll probably end up as a spinning top. Not a lot really to look at. Go on, Euro New Zealand. That means Aussie New Zealand's probably trying to pump. Seymour, coders are raving about it. Chat GPT AI. At the moment, it's free while it's in beta. Simply giving instructions in English can produce fully functional code or improve code you have written. Or you can just chat to it. Chat GPT. Clever. And complicated, probably. Does it program in MQL5? That'd be lovely. But no. I'll have a look at that. I doubt it worked with MQL4. Yeah. It's highly tied to the trading platform. Yeah. Oh, Jesus. Stopped out. Look at that for a stop out. Boom. I've got to be careful I don't. Yeah, I'm going to drop my risk. I don't want to blow this. This is second stage evaluation. I've passed it already. I don't want to blow it. I'm going to drop risk down to $50. If it's going to be a horrible, rangy, nasty piece of work, I'm going to drop the risk across the board just to make sure I don't fail. Let's see, well, not yet. I asked it. It says it wants to learn. Yeah. Can you program in MQL5? Not yet. If you can teach me, that's why I'm here. I don't know how to do it. You need to teach me. So yeah, horrible range this morning on the DAX. It's not going to be a fun day today, I don't think, on the indices. We shall see. What have I got to do? 52.5, haven't I? Yeah, so I've got $750 to play with. This is day 3, so Monday. Just need to make sure I don't lose $750 in 3 days. You'll probably say that about anything it doesn't know yet. I'd love to learn Lisp. Right, I haven't really got anything else to cover. I'm not going to go through all the pairs because I did that yesterday. I'll quickly cover the indices. This is the only thing that I'm really concentrating on at the moment because I'm not taking any position trades. I've got a short on the DAX as a position longer term, and I've been looking for the breakouts. So obviously you can see yesterday, again, spinning top, rotation. I get the feeling we're probably going to do the same thing today, but we'll see. So we've broken out of this secondary range. We've still got the lows here at the top of this propulsion gap. That's what I'm looking to get challenged and tested. So I'm looking for this low to be tested, which is 141.50 area. Once we test that low there, let me just draw it in the chart. So there's 2 levels there really. This is the top of the propulsion gap, and that's the lower that candle. So this little area here is where I'm looking to be tested. So today, this is what I was looking for today, was a move down to ADR. To position ourselves ready to slam through that level and start next leg. So we've broken down through the initial level. Now we need to break through this level. As soon as we break through this level, support is here. So we've got a nice sort of 2-3 ADR move to the downside to come on the indices when we get some momentum. But we've got no momentum at the moment. So again, PPI tomorrow is if we get what I want to see tomorrow is positive PPI figures, which will give the DAX a good drive, which will drive the indices down next leg. So we can get ourselves down into this area, and then we're poised, ready to break. But obviously, the indices, same as everything else, there's going to be a lot of rotation, I think, going on at the moment. So it's a little bit of a dangerous time. Range-bound trading intraday is probably your best bet. So looking for highs and lows. So just really simple. Just draw lines on your chart. And when we get to these points, look at shorts and longs, basically. So yeah, those are the kind of trades I'll be looking to take at the moment. Short there, that doesn't work, short it there. If that doesn't work, short it at ADR. One of them's going to work, and you're just going to rotate. ahead of next week. That's what I'm suspecting. But you never know. Anything can happen. Obviously, Putin opens his mouth. You saw what happened yesterday when Putin opened his mouth. It's just it's so news driven. Everything is just so news driven at the moment. The market is sketchy as anything. So we got the breakdown of the DAX, and obviously then we've gone into rotation yesterday. NASDAQ, we broke down. We've had another bear day yesterday. We managed to break through that low and rejected. So again, not enough momentum to get through the lows. You can see these are holding. We're just not able to crack this level. The market is just not able to get through it with any distinct aplomb at the moment. So NASDAQ, obviously, we've got a fairly wide range opened now. So there is potential to rotate into that. The S&P, same sort of thing. We haven't managed to break. So there's our lows. From yesterday, we came down and retested those at the Globex session this morning. Not managed to break, obviously. So there was opportunity to rotate back up to there. The trend line obviously held. It's very rare, isn't it? Because obviously, any of you that have been in the live room for the last few weeks, this trend line was on here way before this thing got there. It actually worked. Not often you see a trend line work, but that one did. So the world's obviously willing the next leg down, same as I am. And we have got it started. We just need to get some breaks. So potentially you've got rotation back up into there again today. So there's plenty of bullish room on the indices at the moment. And obviously the Dow, same thing. We just held at the lows. Yeah, so we just, we broke, rotate, broke. Just sitting at the moment on the 24. So, the Santa rally is not happening, is it? We're on the 8th. We're certainly not getting a Santa rally this year. Unless Santa's late, I'd say we're not getting one. But obviously next week, if we get a lot of US, we could get a Santa decline. So if we get a good positive US news next week, we could get a move down. So I'm holding my DAX short, which I've got running. Got plenty of positions short on this at the moment, which are in profit. I'm in profit overall on it, and I'm just waiting for leg basically to start. So need some momentum down, but I am obviously open to the possibility of just rotating back up into this area. So sit and wait. But at the moment, as you can see, the market today is just not interested in making money, which is fine. Just stop taking mine. I won't be taking any more of mine. What did Bitcoin do? Another down day on Bitcoin. Sell it. Sell it. So that's what I've got for you this morning. As I say, news-wise today, we've got Lagarde at midday, and then we've got unemployment. So there's not a massive amount of news. I think we're probably going to hang around until there tomorrow. We might find grindy price action today. So, you might find things just move, but they move like that, which would be lovely. If Aussie New Zealand, for example, can push up a little bit more, that would be fantastic. So, price action really just looking for, this sort of gradual move, maybe back up into the highs and just sit around. I don't think we're going to get any explosive breaks out of Asia. And obviously it looks a bit lackluster, as you can see at the moment. So just have to wait and see today, but don't expect anything exciting. It's going to be a bit of a tricky day today, I think, as the opening range has just proven this morning. So if no one's got anything else to look at, I will crack on with my testing. I'll get the EA. Sorry, just my emails. Saw an email coming up. What it was one I was waiting for, but it's not. I'll tidy the EA up and see if I can get that pushed out. I need to test it. I found a couple of bugs in it as well, which I've got to quickly look at. But and obviously then we can all bug test it and obviously test away. But there won't be a lot of documentation with it really. So if you want it, I will document obviously what all the settings do, but there won't be any in-depth documentation into back testing or anything yet because I haven't finished it. But people are pestering me. Which is understandable because it's a bloody good EA. But I don't want to rush it because what I don't want to do is spend the next week bug testing and trying to fix things. And also, it's not done for MT5 either. So it's MT4 only at the moment. MT5 people, sorry. I will do one, but not at the moment. Right, that's all I've got for this morning. Anything you need, I'll be in the Telegram group. And yeah, I will be back tomorrow morning at 7:50 and we'll see what happens. And today I think is just going to be a watching the markets and do something else day by the looks of things. And if something happens on news that is unexpected, I think we're just going to be sitting there and grinding and managing where we are. So nothing particularly exciting to do today. All right. So have a good day. I will be back tomorrow morning, 7:50. Anything you need to get in touch, come in the Telegram group. Otherwise, have a good one. Hope it's profitable if it moves. And I'll see you in the morning.